Hey there, this is David Cox, Senior Portfolio Manager of Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, July the 11th, 2025. Let's get started. We will start off by week. Bitcoin, big week, actually breaking out and broke out. Again, new highs. Rest of assets, pretty much a week off here, a little bit of pause. After a very strong rally, after a V bottom that we've talked a little bit about a couple of weeks ago. So let's just remember, pause your video player at any time for more details, but let's move forward. Here's the S&P 500 on the left screen. You can see clearly an uptrend. Now, again, when you price things in different metrics, right? So this is like looking at something relative to something else. You can see the S&P 500 priced in Bitcoin continues to decline, actually making lows for the move. And you can see the S&P 500 priced in gold, as I've shown you before, actually peaked out in 1999. Again, at the very least, ponder this, right? Think about this. Again, things are not always as we want to believe they are. And again, sometimes we're not open-minded enough as investors. And that's exactly what I'm trying to do here. The global economy, again, is in great shape. How do I know that? Well, copper, which again, usually is credited with having a PhD in economics, is at brand new highs for the move, and that is impressive. And so again, that speaks volumes about what is going on in the market. As fear and narratives overgripped everyone in the face of trade wars, you can see here copper making highs is certainly bullish. Here's commodity prices, kind of the same idea here. On the left side, we've got commodity prices priced in US dollars. Remember, a lot of currencies, especially Canada, for example, had been very, very weak, and we saw actually all-time highs in commodity prices, depending on what currency you're looking at. But again, commodities and Bitcoin getting cheaper. So again, if you had, in that case, Bitcoin to spend on commodities or to buy raw inputs for your economy, the price of goods would actually be falling. And you can see also buying commodities priced in gold has also been falling. So again, that means gold has been a good inflation hedge that has again helped out any country that has had that kind of currency to spend as opposed to their own fiat dollars. Let's just check in again here on old money versus new money. I like kind of pointing this out here. Western Union sitting at new multi-year lows while Bitcoin rises. They seem to be almost the opposite chart. Again, things change, and sometimes they change in ways we don't always want to understand. Okay, so let's look at one of the ETFs here on this is BitQ. I've shown this many times before. We've talked about these corrections. Again, corrections in all stocks, but particularly this group, they can be violent. In fact, the last correction you can see here was marked at 54.5% down. Those are pretty deep. And the problem is that when you zoom out, right, charts can look quite different. This is still in a higher highs, higher lows uptrend on the weekly chart. And this is a daily chart we're looking at. You can see here now, since the April bottom, when the stocks bottomed on the whole, this ETF is up 100%, which is very, very significant. So it's just important to understand that time frame matters very much as investors. And again, we can get caught up in the short term, but again, we have to decide whether we're investing in the short term or investing in the long term. And I think definitely zooming out helps on the charts. The S&P 500, this is my ATR model. It has turned bullish for the first time. It's been a while here. It had been a little stubborn. All the momentum models and breadth models that I have had all turned positive earlier than this one. But the bottom line is when volatility on an intermediate term basis turns down, I put a vertical line on there. You can see that last kind of happened from a higher level, if you will, at the end of 2022, you can see in 2020 and so forth. Just pause your video player, take a closer look at this. But again, I think that some would say, oh my goodness, we can't be closer to the start of a new bull market, but we must be nearer the end. And again, some of these models allow you to think differently. And that's, again, the point. Cybersecurity stocks yesterday had the biggest bar against. What does that mean? Well, it means after a very strong rally and a period of outperformance, they posted some pretty serious distribution, whereby there's a long candle in there. And again, sellers came in and overwhelmed buying. And so again, note that to me equals it is a top. Does not mean it is a long-term top, but it does mean a short-term top. But as I always like to say, again, a short-term top has to happen before an intermediate term top, has to happen before a long-term top. And as investors, again, I think it pays to pay attention to demand and supply. Looking at those cybersecurity stocks, here's 4 stocks that are well-known, large, big contributors to exactly those kinds of ETFs: Palo Alto, Zscaler, Cloudflare, and CrowdStrike. I only pointed out the biggest bar against on the right side here, our Vertical portfolio. Clients are familiar with Zscaler, and again, the bottom line is, yeah, we walk away and take profits on news like that, if you will. Demand being overwhelmed by supply after a big rally, and again, that is called distribution. Here's electric cars here, just looking at this 8-car stock basket here. Again, after a very significant rally years ago, We've had about a 79% fall in these stocks, down point to point. That was the lows of 2024. While I will admit, if you want to zoom in and kind of squint here, you can see it's a higher highs, higher lows uptrend, but it's a pretty laggard uptrend, if you will. Again, this is something we want to be paying attention to, right? So the electric cars are all certainly in the media. Lots of countries and companies and whatnot are participating and contributing toward these mandates. But the bottom line is, from a stock investor standpoint, they are not very good on the whole. I want to point this out again. Technicals are useful, right? I mean, distribution and selling, overwhelming buying. Again, sometimes we don't know why, right? Something is selling, and I think some investors want to go and look at the headlines and try to find a reason. I, of course, am not interested. The reason often shows up later, and I think this is a good example. So Fair Isaac, the FICO score that many of you will know about, came under significant distribution with a biggest bar against. And again, I should point out, this is a stock that's been in a monster long-term rally, right? So this is only a year or so chart, but the bottom line is this was a rally back after a significant sell-off, okay, like the rest of the market. And again, this is in lower high territory, but that was a very, very big bar third week of May. And the bottom line is that I don't know what that is or why that happens, but this week we have found out that it turns out that U.S. mortgages are going to be able to contribute via different scoring, so a competitor to FICO, if you will. So again, that was very, very bearish news apparently, and so you can see the stock has sold off again. But the point is, I'm trying to point out the market knew before, right? And this is why we want to pay attention to demand and supply for stocks, which we can do right through the stock chart. Let's finish off with Sector Watch here. You can see energy stocks up on the top of the list, but again, not really strong by any means. And down on the bottom, we've got gold stocks, which have actually been very strong, still pulling back in a short-term pullback against a bigger picture uptrend. I will be off again next week. I'm going to holiday with a couple of my younger kids, and we are off to Washington and Baltimore and Philadelphia. So I will be back in a couple of weeks, but please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.